A 70 to 90% market crash is coming as early as June. This is according to Harry Dent, who predicted the 1989 market crash and the dot-com crash. Now I'm sure some of you have heard some of his predictions before, but this is his final warning and he's saying it's definitely going to happen. There's nothing that can stop it and it's going to hurt more than anyone can imagine. In this video, I'm going to go over Harry Dent's latest housing and stock market prediction for Australia and the US. I'm going to go over what I agree with, what I don't agree with, and how likely I think it is to happen. What you must know is we're in euphoria in the markets right now. The markets are at all-time highs. There's FOMO in the stock market, in the housing market. Everyone's feeling like they can get rich just by buying the next hot stock or buying a house and flipping it in the year, but huge risk are mounting up, and you must watch this video to the end to be aware of those risks so you can make a better educated decision. Okay, let's get into it.
You know, Chris, that's exactly how every top in the market has ever looked. In 1929 in the US or 2000 in the tech bubble last in the US and around the world. At the top of a boom, things look good. And when you have a pandemic and governments like the US print trillions of dollars to just get the economy back to not even, and is not back to even, by the way, I have all the statistics on that in the US. It's like, oh, everything's great. And the market's at higher highs than ever. The stock market, Chris, is the most overvalued in all of history. At the end of the greatest boom in history. And it's going to go down. I'm sorry. I hate to be realistic after being the most bullish person in all of history in the early 90s in the recession there and worldwide in the US and Australia that said we're going to see the Dow 10,000 by 2000. People thought I was nuts. No, I'm saying at 33,000 on the Dow, we're going to go down.
What he's saying here, and what I agree with, is before every crash, the stock market and the housing market actually rise the quickest and it rises the most. And what we are seeing here now in the stock market and the housing market is prices are going absolutely parabolic. But this is not natural. And the faster and the steeper the declines is, the harder and the faster and the bigger the crash is going to be. And like he says here, people have the most confidence. Everything seems great when it's booming. All the retail investors get in, like in the Great Depression when the shoe shine boy was shining the stock investors' shoes and he started talking to him about stocks. The investor said, okay, now the shoe shine boy is talking about stocks, it's time to get out. And I'm sure you've all seen your friends and family that don't normally talk about stocks or the housing market or investing. They're now talking about it a lot and it's the next hot topic. But this is the sign we're getting close to the peak and that a big crash is on the way. And hey, if there was healthy gains like 5 to 10% in the stock market every year and 3 to 5% in the housing market, I wouldn't be saying we're in a bubble. But we're seeing 50 to 70% gains in 1 year in the stock market, and we're seeing 20% gains in a year in the housing market, which is absolutely unsustainable.
If I want to feel good, can I drink a cup of coffee? That's what they're doing to the economy. The economy is dead. It's been dead since 2008-9. We've come out of the worst recession since the 1930s, and we cannot get it back up no matter how much. 12 years of stimulus, Chris, printing money, and now fiscal stimulus in the US and other countries. Are you kidding me? If this economy is not dead, I don't know what dead is. If I was on the hospital show after this many defibrillators, I would say the patient's dead.
So what he's saying here is the economy is dead and the only thing that's keeping it on life support is all the amount of money printing by the central banks, the quantitative easing, and now the governments have had to step in because that's no longer working and interest rates are at zero, and they've had to provide fiscal stimulus. And everyone thinks the economy is great and the economy is booming. Well, if it's so great and it's all booming, then let the central bank stop printing money, put interest rates back up to normal levels of 5% and tell the money to take away all these temporary programs, and then we'll see how healthy the real economy is.
Absolutely, Chris. I'm telling you, Chris, I love Australia. You have the best demographics into the future of any developed country in the world. US is sideways. Most of Europe is down. East Asia, Japan, Korea down forever. You're the golden jewel. But you have this real estate bubble, which already was the second worst in the world, only to China. compared to income. And now, like you're saying, prices are going up faster. And this is happening in the US as well. In the last stage of this bubble, that's when you know you're in a bubble. That's when it's euphoria. That's when the bubble is getting ready to peak. When people say, I'll pay any price for a house in Sydney or a flat in Sydney, that's when it's about to blow.
So what he says here is the Australian housing market is the second most overvalued market in the world, second to China, and I may say even to Canada, where prices are going crazy as well. And the biggest thing that shows us we're in a housing bubble is that people are willing to pay whatever price to get a property. But this is going to end in tears, and I'll tell you why. Right now, people aren't paying market value for properties. When they're going to auctions and putting offers down on properties, they're paying 20 to 30% over market value because there's so much FOMO in the market right now, and they'll do whatever they can to secure that property. But they're paying these prices when interest rates are at all-time lows. So what's going to happen when interest rates go up later this year and early next year? When they go to value their property next year, when all the FOMO has been taken out of the market and people aren't making crazy offers on homes anymore, well, they paid 20 to 30% over market value before, so now their property could be worth 20 to 30% less. Plus, with higher interest rates, people's borrowing capacity isn't going to be as great, so they won't be able to go and make these crazy bids as people are doing now.
Okay, for the US, I'm seeing 70 to 90% in the stock market, 40 to 50% in real estate. Australia, maybe 30 to 40% in real estate, depending on the more overvalued or not markets. Chris, this is going to be, and I hate to say this, I have not been saying this now. I've been saying this since the early to mid 80s when I came up with my best demographic and technology forecasting tools. We are going to see the biggest downturn in our lifetimes into late 2022, and now pushing this out, maybe 2023. You have to see real estate in Australia go down, I'd say 30%, maybe 40%, less than the US. And stocks, look at the stock market going down 70, 80%. I'm telling you, this is already baked in the cake. This bubble has gone so far, there's nothing you can do.
And so a crazy prediction he makes here, and something I don't really agree with, is he says the stock market could fall 70 to 90% and the housing market in the US could fall 50 to 60%, while the housing market in Australia could fall 30 to 40%. So let's tackle the stock market. What I could see is a stock market correction is anywhere between 40 to 60% starting late this year, depending on how high bond yields go, because the stock market is at all-time highs. So some people are now starting to rotate in bonds, and if bond yields get more attractive up to the 2.5%, 3%, then we're going to see a lot of selling in the stock market and go into bonds. Plus, in the stock market, price to earnings have never been this high since, guess what? 2000 and 2007. And what happened during those times? We had some of the biggest stock market crashes in history. And he's saying we are going to see the biggest crash in our lifetimes because we've had the biggest bull run in our lifetime. And always before the biggest run up, there's the biggest crash. Plus, what a big risk for the stock market is margin debt. And like I've been saying, and I've been saying this for months, is margin debt is at all-time highs and is causing huge risks to the stock market and the financial system. And what happened just last week? A family office and hedge fund defaulted on their margin loan, and that sent shocks through Wall Street. But what would happen if retail investors en masse started defaulting on their margin? Because all it would take would be a 20% decline in the stock market for all of them to start getting margin calls and the prices to plummet immediately. Like what happened in March, the reason why the crash was so quick was because so many people got margin calls on their margin debt. And like what you've seen with Wall Street bets, people are taking on huge amounts of margin debt. They're doing 100 times leverage. There's so much call and put options out there. There's so much derivatives. And really it's the derivatives and margin debt which I think is going to bring the stock market down. Plus, not to mention, there's most likely going to be higher corporate taxes in the US, and that's going to hurt earnings and it's going to bring the stock market down a bit. But I highly doubt it'll be 70 to 90% like he says. Now with the housing market, he's saying 30 to 40% in Australia and 50 to 60% in the US. This all depends on how high interest rates goes. Because like I say, for every 1% increase in interest rates, house prices can fall 10%. And right now, interest rates are rising, bond yields are rising, And central banks are going to have to lift interest rates much sooner than they expected. Plus all these fixed interest rate loans that have been fixed for 2 to 3 years, once they switch to variable rates and all these interest-only loans go to principal and interest, there's going to be a lot of people that can't afford it and they're going to have to sell because they brought in at the peak, they FOMO'd, they over-leveraged because they thought they had to get it, but really they couldn't afford it. So the only way I could see 30 to 40% decline in property in Australia would be if interest rates go up 3 to 4%. And same in the US, interest rates would have to go up 3 to 4% for us to see this big 50 to 60% market crash. But there still are many risks for the housing market, like withdrawing stimulus, unemployment, and another thing people aren't talking about with the housing market is rising property taxes and council rates. While people think it may be awesome that the house price is booming, well guess what? Your taxes are going to be booming and your council rates are going to be booming too. And a lot of pensioners and boomers that bought houses, they're not going to be able to afford these council rates, so they may be forced to downsize and sell their home. And like I said earlier, I think a big risk is people are actually overpaying 20 to 30% now in the euphoric phase of the market. So when the markets does get more realistic in next year, when interest rates rise, if they get an appraiser, because appraisers are normally conservative, to revalue their property, it could be 20% less just due to the fact that they overpaid for the house. So now he gives his timeline and how sure he is.
I am 90% sure it will happen by the end of this year. I am 80% sure it'll happen by June, this peak in the stock market. And then real estate follows. Now, here's the difference, Chris. Stocks, you can get out easy, okay? If stocks go down and crash and then bounce up, you can get out. Real estate is much harder to get out of. So I'm telling people, you got to start getting out of any real estate that you do not want to be in long term, especially in Australia, where it's the second most overvalued market in the entire world, Chris. Get out of real estate now because it takes longer to do that.
And he's saying he's 90% sure it's going to happen by the end of the year. And while I do think there is going to be a slowdown towards the end of the year, I highly doubt it'll be 70 to 90%. I think it'll be more likely 20 to 30% in the stock market. And he's also saying it could start as early as June. And what is happening in June? Well, there's all the government stimulus program. The central banks are going to start quantitative tightening. And so all this money is going to be taken out of the economy and banks are going to start having to hold more capital and more reserves. So we could see a tightening in credit, and that could definitely lead to a decline starting June. And like he says here is the stock market, that will sell off very quickly. The housing market, it's not like the stock market can't just crash overnight. And some people see my videos about how I think a big decline in the housing market could happen. And they're like, oh, Michael, it's been 2 hours. The housing market hasn't crashed yet. I guess you were wrong. But like he says here, it's a very long process for the real estate market because it can take up to 3 months to sell your home. Starting from the time you decide to sell your home, you have to then find a real estate agent, put it on the market, do an advertising campaign, then you have to do settlement. So it's going to take at least 6 months before the housing decline starts happening. And then it could take another 2 months before we start getting that data.
You have to protect whatever, you have to realize this has never happened in history past the 1920s, roaring 20s bubble. This is the biggest global bubble and more global since. You have to look at all your financial assets right now and say, I want to sell them or preserve them because they're all going to go down. Real estate, stocks, everything but the most conservative government, Australian and US Treasury bonds are going to go down to reality, and it's going to hurt more than anybody thinks it ever could. And nobody thinks it could happen. And I'm the only guy on earth saying it, but I'm the only guy on earth that told people in 1989 that Japan was going to go down forever.
So he's saying here it's definitely going to happen. There's nothing they can do about it. And he's saying nobody thinks it can happen now. But he is right, before every big market crash, especially when there's such steep price gains, people think, oh, stock market just goes up forever. I just put my money in and then it doubles the next month. I just buy a house, flip it for the next year. Nobody thinks a crash is going to happen, but boom, it can happen overnight. Just like what happened with the pandemic and just like what happened in the subprime crisis. Nobody saw it coming, but boom, it came and people were unprepared. And unfortunately, people are getting very, very complacent. They're taking on huge amounts of risk. They're taking on huge amounts of debt, and it's going to end very badly.
All the developed countries are keeping the bubble going. Only China because they have more top-down control, is starting to quell their bubble a bit. But even that, once you get bubbles of this extent, Chris, there's no way to stop it.
Right.
They have to come down to reality, and it's I'm telling you, it's 30 to 50% for real estate in most countries, and it's 60 to 90% in stocks in most countries. This is going to kill most people's retirement portfolios, and there's nothing they can do about it. I'm telling people, just get out of the way, get safe investment, highest quality government bonds and cash, and just sit through this. I'm telling you, it's coming in the next 2 to 3 years, and I think it's about to start in the next month or two.
So he was asked here, well, okay, if there is a big crash coming, is there anything the government and central bank can do? And he pretty much says here, there's nothing they can do. They've really cornered themselves. And something I do agree here on what the central banks have done is they've printed so much money, they've dropped interest rates so low, and people have taken on so much debt. There's so much leverage in the financial system, and they've bailed out all these banks, they've bailed out all these financial institutions, and now pretty much everything is too big to fail. The airlines are too big to fail, the banks are too big to fail, the construction industry is too big to fail, the mining industry is too big to fail. Everything's too big to fail because there's so much leverage and so much risk in this financial system, and really this financial system is on verge of collapse. But what they're doing is they're keeping confidence high by printing all this money, by keeping interest rates low, and as long as people have confidence in the financial system, there won't be a crash. But as soon as that confidence is lost in the financial system, that's when we will see the big crash. So my final thoughts are, I don't really agree it's going to be that big, 70 to 90% in the stock market and 40 to 60% in the housing market. I think a more realistic thing would be 40 to 60% crash in the stock market and a 20 to 30% crash in the housing market. But this all depends on how far the government and central banks are willing to go. They could do something called helicopter money if they're really desperate. They could drop interest rates to negative. They could go negative 5 to 10%. The central banks could create a digital currency and give everyone $10,000 to $100,000. They could start giving houses away or buying you a house. Who knows how far this bubble could go. But really what I think is we're getting to the end of the road. Central banks are running out of tools. They keep saying, we've got tools, we've got tools, we've got power tools, we've got big tools, we've got all the tools you can think of. But really they got no tools. They've dropped interest rates to zero. They've printed the currency into the ground. There's nothing really they can do now. The only last thing they could do is UBI and helicopter money, but that is what all governments and currencies do before the collapse. So guys, what do you think about these predictions? Do you think the crash is really going to start as early as June? Or do you think, like I think, it's going to start maybe later this year to early next year? And how much of a crash do you think it's going to be? For all my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like and subscribe button. I'll keep you all updated on the latest housing and finance and economic news. And if you're bored, here's some of my other videos here. I'll see you there.